Chapter 15, how your teen can take advantage of the tax code. I cannot tell you how many times I've been asked this question. Josh, my 16-year-old son has a part-time job this summer. Can he open a Roth? Yes, he can, and he absolutely should. A great strategy is to give him the money to open the account based on the income he made. Incentivize your children to work by opening a Roth for them. For instance, say he made $5,000 washing dishes over the summer, but he wants to spend some of that money. Can't blame him. That's why he worked. Get some spending money. A way to reward him without just handing him over cash is to say, I'm proud of you getting that job, son. Look at all your peers just lounging around. So for your efforts, I'm going to put the amount you made as income into a Roth IRA. And then you send a check for $5,000 to his Roth IRA provider. Maybe that's too much of a gift for him and doesn't incentivize him to save any of his own money. Then simply match the money he puts into his Roth with your contribution. Say he made $5,000, but only wants to put $2,500 into the Roth. Tell him you'll match his contributions dollar for dollar up to his income limits. In this case, he gets $2,500 of his own money, $2,500 of his own money to spend as he likes. He contributes $2,500 to his Roth, and you match it. So now he's got $5,000 in his Roth and $2,500 yet to spend. Not a bad deal in the least. By the way, there's absolutely nothing wrong with doing this from the IRS perspective. Your son made $5,000 as earned income. As long as no more than $5,000 goes into his Roth, he's good to go. Your $2,500 contribution is not a taxable event either, and no gift tax to pay, no transfer tax, no income tax, nothing. Easy as pie, nothing to report. Hopefully, your son will continue to do this each year, so by the time he graduates college, he'll have a nice sum of money saved up in his Roth. Have your working children file a tax return. The standard deduction of $12,000 for those under the age of 65 is much higher than most kids' earnings. So no taxes owed, but have him file a tax return anyway because his employer most likely withheld income from his paycheck. As long as his standard deduction is higher than his taxable income, he will get the income tax that was withheld returned. He won't get back his FICA taxes, the Social Security and Medicare taxes, mind you, but there are benefits to reporting income even if it is only $5,000 each year from a Social Security / Medicare perspective. Every $1,375 in 2018 numbers, your child earns is considered 1 quarter earned towards the 40 quarters they need for full benefits from Social Security when he retires. So it might not seem like much now, but it could prove huge in the future. And again, go back to my YouTube channel at youtube.com/heritage wealth planning because I got a ton of videos on Social Security. What if all he did was mow lawns and had no actual paycheck? He can still open a Roth as long as he reports his income on a 1099. You're going to want to research this a bit to make sure he pays his FICA taxes. It's really not that hard. Just a couple simple forms and voila, he can contribute to his Roth. How about my daughter who babysits? She'll have the exact same scenario as the son who mows lawns. Josh, I'm a dentist. Can I hire my kids to sit in the chair for marketing pictures? Sure, but I do urge caution. Is it truly earned income when your kids are just being used for a marketing piece? That's a tough one. However, if you validate they are cleaning around the office, taking out the trash, scrubbing toilets, etc., then you should put them on the payroll. By all means, do so. If it's legitimate, absolutely take advantage of what is allowed. I always advise clients, though, that it's never worth the risk if there's any way an IRS agent can perceive that what you're doing is not on the up and up. After all, we're only talking at most $5,000 a year into a Roth. Is it worth the risk of the wrath of the IRS to put $5,000 into a Roth for a child? I don't think so.